Stop for just a moment and think about how much better your crypto trading would have been in the last bull market if you were simply able to time the market to a rough degree. Now, I know that statement may sound way too good to be true. Absolutely nonsense. Go straight down, click dislike, tell this guy he's an absolute idiot. But just before you do that and you jump onto your old keyboards there, hear me out. We're looking at this in terms of a macro setup. And we're doing this across many markets. I've got lots of different examples for you guys today, bringing together multiple different pieces of fundamental and technical analysis so that we can get a better understanding of timing so that we're not caught out with our pants down when the market goes down. And I know that this is a very important topic for a lot of people, as we see it time and time again from lessons that we learned from previous bull markets. And I put this post out to you guys on Twitter today. As always, there's always a shield to this. There is Twitter and Instagram, and the links down below in the video description. I do Q&As over on Instagram as well, where you can ask your questions. I'll do a video back to you guys over there. But a lot of the comments here are essentially, trusting the charts, timing the bear market, stop overthinking the market, that it's going to reverse and bounce every single time. Because if the timing doesn't line up with what's going on in the cycle, it doesn't matter how much some fool on YouTube shills about an altcoin, it is not going to go up to new all-time highs because the timing is wrong. Like I said in the intro, it does sound like a massive claim, and sure, if you want to go down and send me some likes or dislikes, by all means. But I want to make this video nice and easy to understand with examples in real time that are put out on Twitter, just like the US dollar top and altcoins and pound. And to our members in the Investor Accelerator, we were looking specifically at gas, which was absolutely crazy at the time, and things like oil as well. These things were in the news headlines. People thought the world was absolutely going to implode, but there were a lot of macro looking signals in terms of fundamentals and technicals to let us know that maybe it's not the time yet for the world to implode. That's what I'll look at in today's video, and hopefully share enough of that insight with you guys watching this right now so that you can use it moving forward into that next stage of the cycle. And before you think, again, this is absolutely crazy, look, a lot of this info is from books that you can purchase online. A lot of it has to do with Gann, one of my favorite traders of the early 1900s. He left a lot of info for us to learn from. And this is over 100 years old, and it still works today. The reason it works is human psychology, timing, the patterns, the price. It never changes. It's crazy to think that, but it doesn't change. The things that go on in the market definitely change. There are different situations now compared to what there were 10 years ago, 20, 50, 100 years ago. But the way we react to these situations never, ever changes. I'm not sure whether that will ever change in my lifetime or your lifetime or 100 or 200 years from now. But if we go back in history over thousands of years, it hasn't changed. So I'm willing to bet that it won't change anytime in the near future. Another massive book to have a look at as well, this one right here, Secret Life of Real Estate and Banking. You guys that have been following me for a long time, which I'm sure are many of you here now in the bear markets when most people have left and people are bored with this stuff, you've seen this book before, and you can start to see this repeat and probably the tone in my voice where it's like, man, we're just seeing this thing again. And I'm sort of like getting almost bored with it. And I hope that if you're around investing long enough, over 10 years, like I've been in the market for over 16 years now. I am probably older than I look, hopefully, but essentially it takes time to actually believe that this is possible. Now, I just want to bring you back to one example, the most recent example that I put publicly here, and this is on Twitter with the US dollar, looking at the tops and then how people respond to this. And then, of course, I want to show you a couple of very simple techniques on how to do it. Before I do that, again, just a little shill. Like, subscribe if you haven't already, so you can stay up to date with this and get the updates when this sort of stuff happens. Another quick note is we're not trying to call the exact top or the exact bottom. Remember, as traders, investors, our job is to take a nice, healthy chunk of profits out of the middle of the market the best way we can. If the middle for us is somewhere up here, somewhere where the confirmation is well and truly in play, that's great, because at the end of the day, all we have to do is make profits from the market. hold on to as much money as possible, basically store that, be safe with it, make sure we have enough left so that we can come back to the market when we're ready for that next stage of another bull market, if we're only going long, basically, if we're only buying and going up. Now, I know I've said a lot here, but really from my experience and you guys that have been going for long enough, you start to realize that the majority of like how to make money in the market is essentially your psychology and how you respond to events. Very, very clearly seen here with your responses here on Twitter just recently today. This is absolutely great to see that you guys are sort of growing from the experiences of the last cycle, as am I for sure. All right, so the dollar, this is what we're looking at for one of the examples. I have so many of these that I've been posting on Twitter. They don't get as much likes because people just aren't interested, but it's the same principle used that we can use for Bitcoin, that we use for altcoins. Let's make money from these markets and not get absolutely swept away with 100K Bitcoin and stupid moon calls from the rest of the stuff that goes on online. So can the news headlines call another top for the US dollar? Caution if 113 breaks down. Eyes on Bitcoin if the DXY breaks down, with the breakdown comes. I posted this on the 27th of September, looking at the 26th being an approximate top here for the DXY. I'm on a weekly chart here. So looking at these weeks beginning the 19th and then this week here beginning the 26th, you can see that the top so far has dead on been that exact time. It doesn't always happen this exact close to the market, but the really important point here, use this for all of your trading and investing so that you can make it next time. Hopefully you made some this time and make even more next time, is that we're just trying to get around that specific level. And for timing, it can be pretty precise. But even if this wasn't the exact top and it went just a little touch higher, who gives an absolute shit? It doesn't matter as long as you're making profits from the market. And I know based on, again, these responses that you just want to make some money from the market. It's not about trying to be here at the exact cent that Bitcoin comes in at an all-time high and then the exact cent that the low comes in, because you can just make money from the middle. That's what it is. You don't want to get emotionally attached to this. Remember the old saying, don't marry your altcoins, just pump them and dump them. Get the hell out of there. So this is the peak there. And what we saw coming in at those times, so these are some of those key signals, market sentiment, those fundamentals coming together that bring on that market sentiment. And then of course, the technicals in price and in time. Time being the absolute most important, as Gann told us that over 100 years ago. The timing, it is possible. I know a lot of people say it's not. Extreme headlines from retail, the most extreme stuff. Now you can look back on it 10 weeks ago, and I dare say this will not get back to 115 within the next 2 weeks. If it does, something has to go absolutely wrong in the world. But I dare say this won't get back to the top, which then means that we would be down from the top for over 3 months. So it's a very significant top in the USD. And at that exact time, there was extreme headlines. A lot of people were posting about this, people who have nothing to do with investing and trading. Keep an eye out for that as well. It's a very big signal, which is objective in one sense that you can start to look for people who are talking about this. I did notice a lot of things, say, on social media from people who are not in investing space whatsoever talking about the US dollar. And the other thing was the euro was collapsing at that point. The Great British Pound was collapsing, and the fear that the US dollar was about to go on this extra long bull market ride and dump the Great British Pound to below parity. And we just saw that on the euro as well. These sort of things often happen around highs, and sometimes the signal can be as clear as this with a massive pump up bar. The next bar also went up as well, then reversed and closed underneath the previous top here. And this is on a weekly chart. So we could go a little more macro for the dollar being on something like a monthly candle or bar. But in this case, we're looking at the weekly, and the weekly gave us some pretty good signals. Then we had to wait into our third week to get a lower top and the market break down from that. So there has to be a lot of patience involved as well. So the other piece to this, that was the market sentiment and some of those fundamentals that were coming together with the market sentiment of why the US dollar should be pumping. But in fact, it was the opposite because the news was telling us that it had to go up higher. We also saw the Great British Pound come in and hit the most extreme panic, wild news headlines. It was phenomenal at that time in September. So just remember that as well. Now, there's time permitting in these particular YouTube videos, but I will go into more detail for our members in TIA. So if you're interested, definitely go and check out the links in the top of the video description here for our free newsletter and our TIA membership. That is in the top of the video description right there. So in terms of the price and the timing of these structures, the pattern playing out that brought time and price together was an absolute double bottom on the monthly chart here for the Great British Pound. And if you know anything about the US dollar, this is actually made up of about 57% euro, and then you're made up of the pound as well. There's multiple other currencies within the dollar. There's DXY, the dollar currency index. So that's why you should see a bit of an inverse correlation to some of these, more so the euro, but not necessarily the pound. But we were seeing a significant double bottom here that happened from 1985 to 2022. It's a very, very long, significant double bottom area. So that's a big price, significant area coming up in terms of a double bottom. The most wild, extreme, panicked headlines. Now, so that's price. Let's have a look at a little thing in terms of time. So getting this timing of cycles. And what we have seen from many, many markets is a balancing of time. Don't worry about the lows or the highs here in price. We're looking at time. The move prior to the dump into the low of September was 15 months up. And as that low came in, we got an exact balance of time. We got a 15 months down before this market then took off for the following 3 months. We're into our third month now of higher prices. We've got a very nice balance there. Looking prior to that, we had similar sort of timings here. So this could have went a little bit lower, but we had a very, very, very significant price come in at the double bottom of 1985. Think about that. It's nearly a 40-year double bottom. This is just not like a 40-minute double bottom or a 40-day double bottom or even a 40-month. This is nearly 40 years between prices. That is extremely significant. So putting these time aspects together, which I'll show in just a little bit as well as some other timings, and price, market sentiment, fundamentals, you can almost have an easy platter given to you saying, yes, the news is telling me that this is about to implode. The UK is done for. The news headlines at the time were that the UK retirement funds were about to go belly up and it was all over. The show was done for. But you got all of these indicators telling us that it's probably the bottom, probably, not guaranteed, but probably the bottom. And I should expect some higher prices from this point based on the probabilities of the past. It's as simple as that. It is a lot to put together, but it can be that simple. Another example here was oil. We mentioned this to our members looking at the peak in 2022. There was a lot of signals coming in at this top here, some price, some time, the same sort of stuff that I've covered before. Looking at that peak when the war broke out in that February-March period, and the market was never able to get to a new high, and we're just seeing it break down even further. We've got some cheaper oil prices at the moment, and this is going to be much better for trade moving forward. These are all sorts of things that I put into the macro play. I do the same thing for BTC, and we've covered this a few times on the channel already, looking at some of the major videos here. Whatever you do, don't just read the thumbnail text, get into the video and learn from those as well. I see a lot of comments from people flipping from one text to the next text, have no idea. Don't be one of those fools. Check out the videos, check out the content in this. And we're doing the same thing on BTC, looking at timings of cycles. We have 3 major cycles going on here. And so even if this low comes in at one of the previous cycle points, it's only within the next sort of 30 to 60 odd days from where we currently are. Remember, our goal here is to make a chunk of profits out of the middle, the biggest that we can, and the safest way possible. I trust that if you made it this far in the video, you found at least a teeny bit of value here. If you did, make sure you smash up that like button, subscribe to the channel, share it with a friend. That is the best way to show support for this particular video and hopefully help out a friend in that next stage of the bull market. Get into the markets, learn about them. It's a never-ending education process, and it's one that I've vastly enjoyed over the last 16 years, and I can definitely see myself doing this for the rest of my life. Guys, I'll see you here on the channel again very soon. Links are in the top of the video description, as I said, for Twitter and Instagram. Plenty of Q&As over there as well. And of course, our free report is in the top of the video description that comes out every 2 weeks. I'll see you guys at the next video. Go and check out the videos that are popping up right now on your left-hand side for more education in this space. Back again tomorrow. See you then. Till then, peace out.